Hello dear traders, I'm Maria Starodop and this is the review of crypto analytics from fx.co. It's the 5th of May today, Friday. And now today's review. The recent Fed meeting did not affect Bitcoin quotes, as well as problems with US debt limit will not affect it also, and probably they are not problems at all. And we will start with an article by Artem Petenko and macroeconomic background and technical picture of Bitcoin. So, on the eve of the important economic events, Bitcoin was stable at position near $27,000. At the same time, trading volumes and bearish activity were limited as investors awaited clarification of the key interest rate situation. And as a result of that day, a large number of facts were announced indicating the approach of an even more challenging economic period. Despite this, there are good reasons to believe that Bitcoin and crypto assets will emerge victorious from the new stage of the crisis. So let's observe the macroeconomic background. First, stock market. The situation in the stock market is still very, very tense, as the price movement of the S&P fully repeats the patterns of the asset on the eve of the Great Depression. At the same time, Bank of America states that most companies are reporting results above expectations. It's also reported that investment inflows into U.S. money funds have resumed. BBG reports that hedge funds shorts in S&P index futures have reached a 12-year high, and Morgan Stanley also notes that the stock market may lose a significant portion of its capitalization amid the looming recession. At the same time, the number of open job vacancies in the U.S. labor market continues to decline, which is a negative factor indicating the growing unemployment rate, and this notes a record decline in business credit demand since 2008 in the first quarter of this year. There was a FOMC meeting, and the Federal Reserve decided to raise the interest rate by 0.25% to 5.25% as it was expected. And Powell noted that inflation is still significantly above the 2% target, and the labor market and the banking system allow the agency to continue raising the rates. He also noted that the Federal Reserve's further decisions will depend on the actual inflation data received, as usual. And also, as usual, he stated that if necessary, the regulator is ready to do more to achieve the goal of reducing inflation to 2%. So what happened to Bitcoin? Technical picture. Let's have a look at the chart. After the events, it emerged victorious from the situation and recovered above 29,000. Firstly, this happened due to the decline in the asset price on Monday, and the Federal Reserve did exactly what was expected of it, leading to the cryptocurrencies price recovery. In addition, tension is growing around the stock market, and more investors are turning to assets capable of protecting capital from potential collapse. Despite Powell's statements, the banking system crisis is only escalating, as evidenced by the 54% drop in PacWest Bank Corporated stock price. And this creates a large window of opportunity for Bitcoin as a hedging tool and an alternative to the traditional financial system. So, in the short term, Bitcoin will continue to remain within the range 27,000, 29,900. And the main target for the asset is bullish breakout of the 30,000 level, where large liquidity volumes are gathered. However, as of yesterday, we are observing a local period of consolidation and reorientation of investors towards Bitcoin. So, powerful price movements from the cryptocurrency should not be expected. So, making a conclusion, Artem says that the situation in the US banking sector and credit problems in the European Union are bringing the global economy closer to a recession. And the slowdown in economic development occurs amid growing mistrust of the traditional financial system. And this is the perfect moment for Bitcoin to show its potential and to remind of itself. Okay, let's have a look at the chart of Bitcoin for the moment. It's the 5th of May and Bitcoin opened today at point 28,867. Then it again arose significantly, made a large green candle and went above 29,000. And now at the moment of the publication, it is trading at the point 29,231. So while it's still inside this very range, 27,000, 29,900. However, it's moving higher and probably it's moving to that very round level, 30,000, which is its main target for the near future. And now let's get to another article by Paolo Greco and talk about talk about the problems with the US debt limit and how it can or cannot affect Bitcoin. So, Paulo says that lately a trend has emerged of well-known cryptocurrency analytical websites to discuss the US government debt limit issue, and it's necessary to express an opinion on the point. Of course, most experts believe that problems with the government debt, which currently amounts to $31.5 trillion, will lead to new growth of Bitcoin. The banking crisis in the US will also lead to the Bitcoin growth. Each new bankruptcy will mean that money is withdrawn from the banking system, and it, of course, must appear somewhere. And in part, this will be in the cryptocurrency market. However, the issue with the US government debt will not impact the Bitcoin exchange rate, Paulo thinks. He says, let's start with the problem of reaching the ceiling of government debt in the US this year. After this, lengthy negotiations begin between Republicans and Democrats on how the decision to raise the limit will be approved. For example, now Republicans demand a reduction in spending of $4.5 trillion, which Democrats disagree with. However, common language is always found in all previous similar cases, and some decision is always made, and thus this time will be the same, as neither Republicans nor Democrats need a technical default. And it also should be noted that more than a half of US government's debt belongs to the Federal Reserve. That is, the US government as a state owes about $16 trillion to its central bank. Moreover, the Federal Reserve can print as much money as needed and buy back government debt. The dollar remains the world's reserve currency, so the printed money will spread all over the world as before without causing a strong spike in inflation within the country. Therefore, Paul thinks that the problem of US government debt is not a problem at all. Such an opinion. Okay. Well, this is all for today. We will see each other in our next review after the weekend. I wish you a good rest and profitable trading as usual, and until next time.